We often receive the question, what costs in respect to real estate are tax deductible? So I just decided to record a YouTube video to explain you all the tax possibilities regarding real estate, but without founding an own business. This is something for another video. But let's talk about all the opportunities if you just buy real estate privately and you rent it out. Because if you live in yourself, you more or less don't have any tax benefits. So let's get started. What is tax deductible? 5 points. First of all, real estate transfer tax. So if you buy real estate, you have to pay 3.5 to 6.5%. Depends on the German state where you actually buy real estate. Okay, in the cheapest state, it's 6.5. And the most expensive one, like North Rhine-Westphalia, it would be 6.5%. Okay, this is fully tax deductible. Notary is also fully tax deductible. It's between 2% and I would say, including the court costs to be registered there, I would say 2 to 2.5%. Depends on the city and actually how well you can speak German. Because if a notary needs to translate the purchase contract and also the whole discussion at the notary to English, then they typically charge more. There are also tools to actually avoid that, but this is deep knowledge. So I would say something between 2 and 2.5%, okay? Because there are some notaries out there, if you do that, if he does that or she does that in German, and you don't fully understand that the notary is canceling the appointment. So it's important that you either speak the language or you have an English-speaking notary or you have a specialist who solves that for you, okay? Notary, what's not mentioned here, also the real estate agent, before we talk about that, but it might be the case that you don't need a real estate agent, but some properties are just able or just are possible to buy if you have a real estate agent who's actually selling this apartment or house. So also real estate agent, I would say on average 3.57%, so 3% net plus VAT. So 3.57% would also be fully tax deductible. Okay. Now, income-related expenses. If you buy real estate and you rent it out, it's tax deductible because you create income. Okay? So always if you create income and you had costs to create that specific income, these costs are tax deductible. Also applies to your employed job, let's say, where you receive a salary. So income-related expenses. What are income-related expenses in real estate? Well, we have property management, we have renovation. If you drive by car or by train to visit the apartment, for example, also tax deductible. So in the end, all the costs which are somehow connected to your real estate investment, either to buy it or to maintain it. Financing costs are also tax deductible, but the costs of a loan. Also, costs of a loan are interest, which means the interest rate is also fully tax deductible. If there are other costs because of the mortgage, it would also be tax deductible. But if you repay the loan, just the rate of repayment is not tax deductible because these are not costs of the loan. It's just that you repay the loan they gave you. Okay? But if you had costs for your loan, it's tax deductible. Okay? Even just some small addition here, even if you took a student loan and you paid interest on that student loan, also this interest would be tax deductible. Okay? Just so you know. And depreciation, if the real estate was built after the 1925. So after 1925, it's 2% depreciation. because the building fabric itself, it's losing its value. So you have automatically 2% depreciation, so you might renovate the house or the apartment in the future. So you see, here are huge tax opportunities. So before you end up paying more taxes, it actually totally makes sense to convert possible taxes into real estate assets. Okay? So this is really interesting if you have a high tax rate. So let's say 42% frontier tax rate, which you have if you earn more than 65,000 euros annually gross. If you are not married, if you are married, it would be 2 times, or let's say the household income 2 times of 65. If you have that tax rate, then you should genuinely consider buying real estate and renting out. You also see here the difference if you would buy something to live in yourself. Well, in the end, you just don't have these tax benefits. And if you have 200,000, let's say 5% here, so 10,000, 2% here, so another 4,000 euros, plus renovation, plus interest, and so on. Especially if you have a real estate broker, you would pay significantly more from the tax perspective in comparison to if you would own something and you rent it out, which doesn't mean that it doesn't make sense to buy something for home ownership. I'm just saying it makes more sense to buy something and to rent it out. Most of our clients do actually both. So if you would like to have support regarding real estate, or you have any questions to create a real estate portfolio or to save more taxes on real estate, for example, feel free to reach out, register for a free initial consultation on our website, and we will see how we can help you in your specific situation. So take care and possibly talk to you soon.